The main goal was really to help other doctors to achieve this financial freedom. I truly believe that all doctors were financially free. We could change medicine for the better.
All right, we're here with Jordan Frey, who is a reconstructive plastic surgeon in Buffalo, New York. And Jordan, thanks for being on the Alternative Investor.
Yeah, of course. Thanks for having me, Brad.
So maybe just help the audience understand, how did you end up in this world of advising in the alternative space?
Yeah, so that whole journey started about 5 years ago. So I'm 5 years into my practice now after completing training. And the story basically started around like 2019, 2020. I was at the end of my training period. So that was after medical school, 7 years of plastic surgery training with a microsurgery fellowship. So 7 years of training total. And I was kind of at the end of this route, really found myself burned out. And that was something that was surprising to me. And I realized a huge component of that burnout was a lack of financial well-being, which I never even considered a part of overall well-being. But essentially, I was at the end of this road. People were telling me, oh, it's going to be fantastic. You're finally going to graduate. You're going to start making a lot of money. Because as residents in training, you don't make a lot of money as a doctor. So once you get out, I'm finally going to start making all this money. Everything's going to be great. And in my head, I was like telling these people, I was like, no, you don't understand. It's not all great. I have $500,000 of student debt. I have credit card debt. I have no investments. I have no savings. I don't even know how to go about those things to make it better. Yes, my salary, my income is going to increase dramatically, but everyone's just telling me how my expenses are going to increase even more. And I just didn't see a way off of this hamster wheel, even though I was set to become a high income earner. So that was at the stage that I committed myself to learning about personal finance, just very basic components of like, you need to create a savings rate. You need to, save some of that money that you make and set it aside. And then you can't just set it aside because you'll actually lose purchasing power due to inflation. You need to invest that money. And so then that came naturally where I started to learn about very concepts in investing, like kind of investing via index funds to approximate the overall market and the stock market, things like that. And soon after that, I got into learning about real estate and investing actively in real estate, those kind of more advanced investment strategies. And along with that, I realized that there were just tons and tons of doctors that were in the same position as me, as we're very highly educated individuals. But we pretty much know nothing about personal finance, which has led many doctors to be living paycheck to paycheck despite their high income, either due to not saving any money, to making poor investments, to being led down the wrong road by financial advisors or people touting different investment opportunities. So I started this platform, the Prudent Plastic Surgeon, to talk about and share my experience with other doctors going through the same thing. So that's kind of a long answer to your short question.
No, that's really helpful for context. Okay, so then did you immediately start with index funds first, and then you educated yourself on alternative investments like real estate? Was that your first entry into private markets?
Yeah, that was my first entry. It all happened pretty quickly. I definitely learned about index funds early on. The thing is, I was learning about all of this. I was in my training living in New York City with two kids. So I didn't have a lot of extra money at that point.
Sure.
Initially, my savings rate was 0 and then slowly increased it up to 4%. And that's kind of where it topped out in training. So I learned about all this stuff. But then by the time I was actually putting it into action was right around when I was learning about real estate, and had a very similar introduction to that as a lot of people, which was like reading Rich Dad, Poor Dad and going, okay, there are these potentially private investments that could have a greater return and have different ways of increasing your wealth and building assets. So I also started that right around July of 2020 and jumped in pretty quickly.
Got it. And what kind of property was it?
This was just a duplex. We now own 9 properties. They're all small multifamily, so like duplex, triplex kind of things. And that first one was just a very small one. The purchase price was $184,000. We got it with a 20% down mortgage and a cash flow to $1,000 a month.
Got it. And then was one of the main drivers for doing real estate, was there a tax component to this, or why not just buy more stocks and bonds?
I think the whole package kind of resonated with us. I say us, my wife and I have done all this together. And I think it was everything. Number one was cash flow. We love the idea of every month there's going to be cash coming in. And yes, we have to put a down payment on, but even when you look at the cash we put in every year, we're getting at least 10% of that back via cash flow. So that was number one. Number two was the appreciation, just the idea of we can force appreciation. We took this property and we did some repairs on it. It wasn't like it needed a complete gut job or anything like that, but very quickly we were able to increase the value on it to where the value of the property was $220,000, and we were able to do cash out refi of that and get money to put a down payment on a second property pretty quickly. And then tax advantages was a huge one. This first one, we didn't necessarily plan. We were going to do a cost segregation, bonus depreciation, but we ended up doing that the following year. Once we had a few more properties, my wife, who was a professor at a local university at the time, realized she could make a lot more money from just managing our real estate and getting real estate professional status than she could from her day job. So she ended up retiring from that and just doing real estate full time. So we were able to maximize those tax advantages as well. So I think all of the above, we recognized, yes, it was more active work and more due diligence, but it paid off a ton more than, let's say, just investing in index funds.
Yeah, and we see that a fair amount where there's a partnership with a spouse. The one has maybe a W-2 job at a high earner and they're bringing
Mm,
in a lot of recurring revenue, but at a very high ordinary tax rate. And so then maybe the other partner decides to become a real estate professional. And then if you do the math on an after-tax basis, that other person actually doesn't need to earn that much money to justify, maybe
yep.
quitting their current job, or especially when you factor in things like childcare, right, and healthcare. So yeah, no, we see that quite often, that pairing of a real estate professional with a high ordinary income type of job, like a doctor.
Yeah.
So then does she have a staff, or is just really just managing all the assets herself day to day?
Yeah. I mean, it's really her as the quarterback of the thing. We have like an online property management platform that we use. It's called Hemling. We don't have an affiliation with it or anything,
Oh
but it's
yeah,
been
I'm
great.
aware of them. Yeah,
Yeah, so that's where like we're able to advertise all the properties, rents come through there. If there's a maintenance request from the tenants, that gets put through there. That helps kind of centralize everything. And it's pretty cheap. And then doing this now for 5 going on 6 years, we've been able to build up a pretty good team. So we have like a great contractor, we have a great handyman, great plumber. So even though she's managing everything, it's not like he's always going in and like she's not fixing the toilets and stuff like that. A message will
totally. Yeah,
come in saying, "Hey, toilet's not working" or something. She texts the plumber. The plumber says, "I'll go over there." They talk about what the issue is, plan
sure.
out the repair. They take care of it. So it becomes pretty automated. Definitely in the beginning, it feels a little more hands on because every problem that comes up, it's the first time that's ever come up, and you go, "Okay, well, how am I going to deal with this?" But then you deal with it. And then the next time it comes up, it's not a big deal. And you just manage it easily.
Totally. You guys kind of think this through from the get-go, or did you get to this place organically where you were like, no, we're going to set it up and start buying these assets one by one, create this portfolio and get the tax benefits from day one? Or was just like, here's one investment and then, wait a minute, if you quit, we actually would be netting a lot more money.
Yeah, we had the vision. We definitely had the long-term vision because I think that's where a lot of doctors and high incomers and people in general just get caught up with real estate in particular. Like one deal, whether it's active or passive, is not necessarily, that's not going to get you financial freedom. Like we bought our first property, it was an extra $1,000 a month of cash flow. At that point, you go, well, that is kind of like a drop in the bucket compared to what you're making monthly. It doesn't really do that
Move the
much. So
needle.
why am I
Yeah.
doing this? And it's extra work. So no, we had this idea of, okay, we're going to buy one, we're going to use that to buy another, and to kind of see things snowball. And then now here we are 5 years later, the cash flow is around $11,000 a month. That is a big difference. And, we've got these processes automated where it's not as much work. So you have to have the big picture in mind. If you just go in and say, I'm just going to buy a property just for, the fun of it and see how it goes, and maybe we won't get another one. That's when you see people that kind of buy one and then a couple of years later are selling it and are like, real estate doesn't really work. Or you see
Sure.
people go into one passive deal and, don't really see how you stack those things on top of each other to create passive income.
Yeah, and I think that's especially true when somebody tries to do it on their own, right? Well, we'll see a fair amount of
Mhm.
clients that will say like, "Hey, I own 3 duplexes or a couple of rental properties, but I have a full-time job and it's brutal." And, okay, if you're going to stop there, then it's probably not worth your time because,
Mhm.
when something happens at the property, it's an emergency for that tenant, even if it's pretty small. But you have your day job, so yeah, I often find it's not good to dabble as a full-time employee with especially a high earning one that can generate a lot more money in their main gig than a one-off real estate investment. But if you do it with design, you do it with a plan to scale it, then you can see how that compounds. And so do doctors, I find that they tend to gravitate towards these income focused investments. And is part of that calculus that they're trying to think through about, hey, I'm replacing my paycheck someday?
Yeah, I think that's exactly it. I think there's two kinds of doctors that are looking at it that way. And burnout is obviously a huge ongoing, I would call it epidemic in medicine, where doctors are getting burned out, working longer hours, getting less compensation. More and more are getting pushed into an employed kind of position rather than where traditionally physicians have been independent, managing their own practice. There's more administrative and legal work and things like that. So all of that kind of is compounded to where a lot of doctors are at a point of where I don't really want to practice anymore, or I feel like I can't practice on my own terms. So they start thinking about, well, how can I get out of this? And also, a lot of times, because of just a lack of financial awareness, physicians have, used their income and spent a lot without saving a ton. So they have a lot of expenses that they need to keep covering. And it becomes a game of how can I replace my clinical income, along with how I can manage my spending. But that's a discussion for another podcast episode. But yeah, it becomes how can I replace my clinical income? It's how I can do that in a way where that income is leveraged a bit. Whatever your day job is, but especially as a doctor, you're getting compensated on a one-to-one basis for the effort that you put in. If you work $100 hard, you're getting $100. You want to ultimately get where you can replace that and go like, okay, I'm working like $5 hard, but I'm getting $100, or I'm working $0 hard. I'm sleeping and I'm getting $100.
Sure.
And that's where real estate and these alternatives can come in. And so I think a lot of doctors start to recognize that, especially if they look at other ways of replacing their clinical income and go, okay, well, I can, leverage my medical knowledge to be a consultant, but I'm still working one to one for that income. And a lot of times that income is actually less than when I was working as a doctor. So is this really fixing the problem? So I think that's one type you see a lot. And then another type is just more simply, it maybe is similar to me where I love practicing medicine, but I know that I enjoy it a lot more when I can practice on my own terms, when I can do it because I want to, not because I have to. And that's a very simple mindset shift, but it really makes all the difference in the world. So I think you're seeing a lot of doctors who go, you know what, I still like doing it right now, but maybe in the future I won't. And I want to set things up so that if I just wanted to step away, whether it was for 6 months, a year, forever, that I could do that. And so I want to have this side income coming in to supplement and to be diversified in the income that I'm making.
Yeah, I think that is exactly it. We have a fair amount of doctors who are investors or clients, and they will say that exact thing that, hey, we want to be able to practice indefinitely for a much longer period of time, but I can't do that if I'm still grinding at 60 hours a week, right? Then I'm going to just retire. But if I can do it on my own terms, I might go 20 years longer because I can do it on my own time with the exact design that I want my life to look like. And so, yeah, that's a powerful component.
Exactly.
Yeah, I do think doctors are pretty good at doing the math too on the after tax dollars of these
Hmm.
additional investments, especially within real estate with bonus depreciation, which you touched on. But I do think for whatever reason they're pretty good, and that must be because your ordinary income's taxed at upwards of 40, 50% in some states. But they are very good at
Yep.
thinking through. Wait a minute, I can get additional income, and with depreciation, I can defer that. So I'm not paying taxes on that cash flow. That starts to get pretty compelling. And then I also see a fair amount. You mentioned how younger doctors kind of feel like, how do I get out of this debt spiral? And you're earlier in your career, and it does seem like they're kind of figuring out, well, hey, look, yes, I make a high income, but I'm paying off a lot of debt. I have to buy a house. I have this lifestyle that goes along with being a doctor. And I don't know exactly how I'm going to like jump up in that next level of net worth. And so some people see it as, oh, well, this real estate investment or this business investment is my way to kind of leapfrog if it works out. Did you think through
Yeah.
that at all? Or
Yeah, I definitely did. I would say like more so in the sense of this is a way that I can accelerate my path to financial freedom, to like only working because I want to, not because I have to. And I think you mentioned something very interesting, which is that like doctor lifestyle that so many of us perceive that we need. And it's so important to combat against that in the sense of figure out what you want, what is valuable to you in your life and pursue those things, but you don't need to, keep up with the Dr. Joneses, et cetera, because you can go crazy doing that. And also that's like a recipe for living paycheck to paycheck.
Totally.
Even, I know doctors making seven figures who are doing that paycheck to paycheck. But yeah, that was definitely a way we looked at it, is like, this is how we can accelerate things. And it's really interesting. So, right when I started this wealth building journey, my net worth initially, when I finished my training, was around negative 500,000, a little bit more negative than that, but in that ballpark. I said, my wife and I said, we're going to create a savings rate, which we did. And it was around 30-40% initially. And we're going to take we're going to take a third of it and we're going to use it to pay off debt, like student loans, things like that. We're going to take a third of it and invest it in the stock market via our tax advantaged accounts and invest in index funds. And we're going to take a third of it and we're going to invest in real estate. Now, fast forward 5 years, my net worth is around 2 million. Out half of that, if not more, maybe like 60% is actually real estate. And the rest is, equities and in terms of like stocks and bonds and stuff like that. And our student debt is all paid off. But that real estate slice grew way quicker than the rest, despite it being, an equal amount of fuel being put into the fire. So
Sure.
that just illustrates again how powerful that can be. There's certainly a lot of people doing real estate only and eschewing all the other, stuff or not investing in their 401k. I'm big on like a hybrid approach if you can do that. But there's no doubt with real estate, if you do it the right way, it's a faster path.
And how are you finding these deals? Kind of to go deeper into real estate, like how are you getting these attractive deals that where the cash flow works? Because I find a lot of markets, single family real estate works as an appreciation game, but not as a cash flow investment.
Yeah. I mean, we're just really mathematical about it in that our
Yeah,
goal is 10% cash on cash. If we find a deal that meets that, we generally will take it. If it doesn't, then we won't. And in terms of finding those deals, I truly believe like they're out there pretty much everywhere. I mean, some places are more than others for sure. Like California is a very
sure.
challenging place. Like New York City, you're probably not going to find that. But in general, they're out there. And, I live in Buffalo, New York. That's where I'm from originally. It's also where all of our properties are that we invest in. When we initially started, Buffalo was ranked as like one of the worst markets for rentals. And it's now ranked near the top, interestingly enough. But even when it was ranked the worst, we were able to find these good deals. I really attribute that to a few things. One is finding good agents to work with. So we found agents who they were investors themselves. They had multiple investment properties. They understood the language we were talking. They understood the guidelines we set out. Even if they didn't always totally agree with it, they understood what we were looking for. So they could bring us just the deals that made sense. Two, though, is patience. Like we probably analyzed like 50 or more deals before we found one that really works and we got our first property. Part of that was just so we could practice. Now we can look at a deal pretty easily and say like, no, that doesn't work, without going through all the calculations. But we looked at a lot and eventually you kind of find it. Persistence usually equals success. And then the third is like demonstrating with your team and with the people you're working with that you're committed to this and that you're actually going to buy properties. Because all of a sudden, once we got a few with our investor agents, they started going, hey, you know what? I have this off deal one. And instead of putting it on the market, I know you guys are good for it. If you're interested, like we could just do this. So
Yeah.
that's how we found some of our best deals.
Yeah, it is funny how it compounds, right? When you focus on a market and you do a similar type of
Yeah,
deal, it does snowball for sure. I had the same experience when I was buying real estate as a principal, where you just all of a sudden
yeah,
that first one super painful, took forever, but it breaks through, and then the broker is like, "Well, you were easy to work with. Let's send you another deal," right? So
exactly.
it certainly does get easier. So maybe let's switch to your platform now. Remind me, is it the Prudent Surgeon?
Prudent Plastic Surgeon for that
Prudent,
alliteration effect.
there you go. The Prudent Plastic Surgeon. Maybe just talk about what the goal is there and why you're passionate about it.
The main goal was really to help other doctors to achieve this financial freedom. I truly believe like it's no secret healthcare in the United States is super messed up and overcomplicated and in a very challenging landscape. And I believe that if all doctors were financially free, meaning that we could work because we want to, not because we have to, because we need that paycheck, that we could change medicine for the better in total for healthcare workers, for patients, that we could provide better care. So I think there's a huge overall systems goal there as well as just the goals on the individual level, where I personally experienced how improving my financial well-being improved my overall well-being and made me a better person and a better doctor. So it really is just a passion project of achieving those goals. And one of the issues I saw when I was starting to learn about this stuff is there wasn't anyone who was still going through the process. There wasn't someone who was still practicing medicine, who was at towards the beginning stages of
Sure.
this and documenting how they were going through it. It was a lot of people who had retired from clinical medicine and were I would say it was kind of like shouting instructions back from the finish line. It's helpful, but it's not as helpful as when you have someone who's running the race with you. So I just kind of thought, you know what, I'll talk about this. I'll talk about all the mistakes I made and all the gory details and the mistakes I continue to make and the growth and successes that I have. And so it's been a very fun, unintended journey.
Yeah, no, that's great because I completely agree. There is a fair amount of doctors and retired doctors that have focused on this investment advice niche, but you're right, they've already hit it, right? And
Hmm.
so, yes, it's interesting. They know a lot, but it's almost better when you're younger and you want to see somebody who's maybe like 6 steps ahead of you, not 30.
Yeah,
Yeah.
exactly.
So yeah, I agree with that. Yeah, no, that's interesting. And are you guys an education platform only? Is there investment, research? Is there a deal overview? What exactly? Maybe go into some details on the platform.
Yeah, so it's a little bit of everything. I mean, the main component is education and teaching doctors and people in general how to think about finances, how to adjust their money mindset. So philosophical stuff like that to very technical stuff like, hey, this is kind of how the stock market works. This is what active investing and this is what passive investing is. This is what research shows between the two. Here's how to determine how much you think you would need to retire, or if you're looking to create an alternative source of income, here's how to go about that. And then the other kind of aspect on top of the education is just connecting doctors with opportunities. So whether that is something as simple as, here's someone who's looking for a physician with this knowledge set to consult on something. And, that's a way for someone to get some side income to, hey, these are people who are offering, real estate investment opportunities that I've vetted that I think could be good and introduce them so they can see if it's a good fit with their portfolio. So really just trying to provide all the resources that a doctor could need and could use to build their path to financial freedom. And again, it's not something that someone's going to achieve in 1 year or something like that, but to get all of those bricks to build the foundation that's going to set everything up for them.
Yeah, and what the great part about it is just like stacking these investments that generate income. It does, as you've kind of mentioned, it starts off with 1,000. You're like, okay, that's nice, but that's not moving the needle on my lifestyle. But then you put your head down, keep doing it, and then you look up a few years later, and it's wow, this is meaningful. What
Yeah.
errors or what mistakes do you see doctors making in the alternative space when they do kind of dip in, maybe without some education or with assistance?
Yeah, I mean, number one, the biggest I think is a familiarity bias. And I mean that in a couple of ways. One is a lot of times you'll see doctors go into and invest in something related to the medical space, whether that is in real estate, like medical office building,
Wow,
or
yeah,
whether that's like device design or new medical products or something like that. Because we think, oh, we're doctors, we're in the medical field every day, we know all about this. And
totally.
it just doesn't translate like that. If only it were that easy. It's just because you're a doctor, it's hard to judge whether some medical office space is going to be successful. Practices will fill it if some device is going to be used, etc. So that familiarity bias, and then a familiarity bias in terms of like the trust that we have. I think for us as doctors with the doctor patient relationship, you kind of just assume that every professional is going to be like you as a doctor. meaning a patient comes to see you, you're just giving them to the best of your ability, the right advice. You're treating them no matter what, color, race, creed, what they believe, how much they make, etc. You're just treating them 100% to the best of their ability to get them as close to healthy as possible. And we think that all professionals have that Hippocratic duty, like when we go to someone selling a car, they're like, this person wants to sell us the best car for the lowest price. Well, that's not really the case. And we assume that with the people who are advising us financially as well. We go, oh, yeah, of course. They're just going to tell us the right thing to do. They're not going to do something that isn't the best for us just because it makes them some more money when that may be the case. And so even again, going into the alternative space, which is, for better or worse, less regulated, a lot of times, doctors can get sold on a deal thinking that, hey, this person is looking out for my best interest when they may not be. And we just don't have the education to how to do due diligence on our own, how to understand someone, like yourself that has done a lot of due diligence, seen deals through, been through multiple cycles of a market, etc. So we don't always know who to trust, and we often are too trusting. And so we'll get into these deals that are not great and potentially, we can lose money. And then what I often see is people will go, yeah, that doesn't work. Investing in real estate doesn't work because I did it and this deal went kaput. I'm not going to fall for that again. It's like, well, no, that's not the case. You went and saw a snake oil salesman instead of a doctor. You bought from someone who was selling you something instead of a true investor, co-investor.
No, that's really well said. And yeah, that is a problem with the industry, right? It's small balance real estate, especially. It's not regulated very heavily at all. I mean, yes, there is securities law, but the vast majority of people offering investments in real estate are actually not financial advisors. There's no fiduciary
Yeah,
responsibility. And that was part of the thesis about why we started Evergreen, is that we do have a fiduciary standard. We're helping clients find investments and allocating their capital as if it was our own. And that's the kind of standard you want if you're wanting advice. Like, sure, if you're going to look at a broad spectrum of investments, each of those managers don't need to be your advisor. But if
Mhm.
you are trying to look for somebody that is going to get you exposure and speed up your learning curve, yeah, it often best is if they have some sort of skin in the game from a regulatory standpoint, and they have to act in your best interest, is certainly comforting. So I think it's great that you're
Exactly.
you're educating the space, because yeah,
Yeah.
I think too many people lost money on these multifamily deals, partly because they just didn't have the education and they didn't understand what they were investing in. They didn't know that floating rate loans were so much more
That's what I was gonna say.
volatile and riskier than fixed rate loans. So yeah, I think it's great what you're doing.
Yeah, I was just going to allude to that exact thing. I think during the COVID time, we saw all of a sudden, everybody all of a sudden was a real estate operator or a deal sponsor, and rates were obviously historically low. And what investors didn't realize is these were all like you said, floating rate, adjustable rate mortgages. Which, if you have to guess which way the rates are going to go in the future, if they're at an all time low, they're probably going to go higher. And so many investors, fortunately, fell victim to that, and to people who were not really navigating the market the right way. So that's a perfect example of that.
Yeah, and the other one I see with doctors, and let me know if you agree, is that sometimes they'll write like a 250 or even a $500,000 check into one deal, and that's their only real estate exposure
Yeah,
besides their house. And I'm like, well, no, you're supposed to think of this as you would your stock portfolio, where you spread around and you get a portfolio, because you have no idea what could happen with that one individual property from a risk standpoint. Whereas a portfolio of real estate properties, fairly unlikely if they're conservatively leveraged for all of those to go horribly wrong, right? So yeah, do you see that where there's kind of over concentration?
yeah, I definitely see that. It's interesting. I haven't really thought about that, but it does almost fit with the archetype of a lot of doctors I see that they'll go, okay, this investing thing or this finance, it's just too difficult. So I'm just going to do it into this one deal and that'll somehow simplify it, or then I can just forget about it. And you're right. That's just putting, unfortunately, more risk due to lack of diversification. So yeah, I definitely see that as well.
And do you guys touch on other asset classes within alternatives, or is it mostly real estate focused?
I would say largely real estate. There's some on private equity, especially within medicine itself. Private equity is becoming a huge thing with them buying out a lot of practices,
Sure.
which I think has good and bad components. I'd say that's probably the other largest alternatives class that we'll talk about.
Well, what's the future hold for the Prudent Plastic Surgeon? What are your goals and what does the vision look like?
I think the biggest thing is just growing in terms of expanding our audience and what we can offer and what we can bring to people. And I think, like you said, the number one thing that by and large people, whether they're emailing me or reaching out on comments or whatever it is doctors are looking for alternative streams of income to diversify their income because medicine is facing this crunch, which it has for a little bit of rising costs of medical school tuition and stuff like that, and shrinking compensation, which is in this year only set to likely get worse as the Medicare rates get renegotiated. And this time it's being done by Washington instead of by the AMA. So that's where I'm really looking to expand, is trying to help other doctors find those opportunities, ways to have their money make money for them, which is super important. So that's really, I see a significant avenue in the future.
And because of that, this extra $11,000 that you have coming in per month, how did that affect your life emotionally and from a stress level?
It's huge because right now that $11,000 a month, we don't really need it or use it. We just use it to reinvest in more real
Sure.
estate. But we're at a point now where that plus some of our other investments, if let's say if I decide to retire or something, we wouldn't live at the level that we want to. We're not quite at our financial freedom goal yet. But if the worst case scenario happened, we would be just fine and our kids would be fine. So it's a huge sense of belief in one sense, satisfaction in another in terms of what you've kind of built and grown. So it's a big deal. It also allows you, I'm big on talking about intentional spending. So this idea, people always accuse me of being overly frugal, but I'm like, I'm not saying don't spend your money. I'm just saying spend it on the things that like you value, on the right things, the
Sure.
things that bring you an amount of joy that equal that price value. That extra money, we've been able to do some very cool things. Like even, I hate to admit, I'm a huge New York Jets fan, but earlier in the year, we brought my kids and everyone, we were able to go to a Jets game and stay in some VIP suites and have a lot of opportunities like going on the field. So that was a once in a lifetime opportunity for us, even though they lost and generally stink. But we're able to pay for that completely with a third of what our real estate income was that month. So it's like you go, well, that wasn't so bad. And so we've been able to do other vacations and stuff like that. So it's a huge deal.
Yeah, and the next month that money comes in just like it did the prior month, and it doesn't
Exactly.
require your time. Your time is leverage, rather, is your point. And yeah,
Yeah,
I agree with that. When we go on vacation, I turn my brain off from looking at the cost of stuff. Right, it's just like it is
yeah,
what it is. It's
exactly.
bizarro world. We're just going to enjoy it.
Yeah,
Right, it's worth
yeah,
it. Whereas going to the mall or something or shopping for a car, then it's like, no, we're going to be reasonable because this is a
yeah,
ridiculous expense versus a
yeah,
lifetime memory
exactly.
with the kids. Yeah.
Exactly.
Well, no, I think that's really a smart way to approach your financial life. We always say, look, you want to have these extra income streams that are not dependent on your time, because if you just put it in stocks, it's really hard to sell to pay for these things, right? Because
Mhm.
you got to pay the cap gains taxes, and you just emotionally, what was it? The market's down 30% that year. Nobody
Yeah,
likes selling stock to go on a crazy European vacation with their kids. It's people are like, no, I'll hold that. Whereas if
yeah,
it's income that's coming from your investments that you know is going to happen the next month, it's just easier to spend that money on
ex-
anyways. Well, this has been great, Jordan. Thank you so much for sharing your insight. I think it's a unique look into how high income investors think about alternatives, think about adding real estate and adding additional income streams to their financial picture. And so it's really been useful to hear it from somebody who's going through it and living these decisions day to day. So thank you.
awesome. Of course. No, so glad to be here and thanks for everything, Brad.
And where should we send our audience to learn more about your platform?
Yeah, if you want to learn more, you can just go on the site. It's prudentplasticsurgeon.com, or you can just shoot me an email, Jordan, Jordan, at prudentplasticsurgeon.com.
Well, great. Well, thanks again for being here, Jordan.